We're here in Pretoria where the Land Bank has called us as the media to come and explain to us and give a little bit more detail about the deal that has been struck between itself and some lenders. You'll remember that back in 2020, the Land Bank unfortunately did default on its payment and it had to halt lending to a lot of agricultural, the sector as it is, or farmers, those in the agricultural sector, and it resumed once again in 2022, and since then it has been finding ways of trying to get back on track financially. I'm joined now by the CEO, Mr. Thembari Khotso, who's going to explain to us in a simple way how exactly this new deal is going to be structured and how is this going to impact on the farmers and the lending criteria that they will have to the agricultural sector going forward. Mr. Khotso, thank you so much for your time. In the simplest of terms, firstly, maybe let's go a little bit back to how we got here in 2020 when you started to default. What had happened?
Okay, thank you, Diabo. Well, of course, what happened in 2020 was quite unfortunate. What happened was that there was one particular payment that the Land Bank had to make at that time. Unfortunately, there wasn't enough liquidity at the point in time to make the payment, and it defaulted, meaning it failed to make that particular one payment. So that lender who could not be paid in 2020 accelerated, and of course, meaning the lender demanded that his loan needed to be repaid in full at that point in time. Because of that particular one default, we had a cross-default clauses, which then meant that the entire loan book of the Land Bank actually got defaulted because of that one small loan.
And at that time, obviously, it was at the height of COVID, and everyone was trying to figure out ways of keeping their heads above water. From your knowledge, your clients, how were they impacted when you had to now stop all lending at that time, and how did that impact their repayments to you?
Yeah, of course, the clients got affected quite badly. As you know, the Land Bank, as a dedicated development financial institution in the agricultural sector, was a main lender at the point in time. If you look at the debt book at that point in time, the Land Bank had more than 25% of the agricultural debt at the point in time. When the Land Bank went into default, it meant that many lenders who were dependent on the Land Bank wouldn't access financing in the debt capital market. They wouldn't be able to be assisted by the Land Bank. So they really struggle. The void that was created by the Land Bank going into default affected the sector quite badly. Of course, you remember that it was also at the same time that we had, of course, COVID. But the agricultural sector, because of its importance and the role it plays in ensuring food security, was of course open to do business. But of course our clients couldn't access financing. It means they had to go into commercial banks and find other ways to finance their agricultural activities. Yeah.
You have, it's been a long road for Land Bank to get where it is today. Could you simplify the details of how this new deal is going to be structured for the liquidity of the bank, of course?
Yeah, so with this debt restructure that we are announcing today, it means that we have reached an agreement with our lenders. We have been operating in default. So with this debt restructure, it means we will, of course, get out of the default. Of course, when we are in default, there were a lot of controls, there were a lot of restrictions in what we are allowed to do. Now that we have reached an agreement with our lenders, it means the Land Bank will now start to operate as a normal financial institutions. There were a lot of penalties that were charged to the Land Bank, which actually meant that our cost of funding was quite high and our pricing to our clients was of course affected. Now that we have reached an agreement with our lenders, it means now we can actually start to be paid the normal rates, we can start to operate as a normal bank, and we can start to be available to support our many clients who so desperately requires the Land Bank. Of course, the Land Bank, as a dedicated DFI in the sector, it's able to give patient capital to our clients, is able to give affordable financing. If you look at what we're able to do in the past 12 months with our blended finance program, where we approved more than 1.5 billion worth of blended finance, with about half of that actually being granted. So the land bank coming back into the market means that many of our clients will access funding, they will get affordable financing and patient capital.
You did lose some good paying customers in the process. How do you plan to get them back?
Of course, we have restructured our operating model. We have identified the key agricultural nodes where we have to be represented, and we are strengthening our banking function. So with the strengthening of our banking function, we are reaching out to many of the clients that we lost, and we're starting to talk to them, and we are recruiting them back into the land bank. Of course, many of those clients left because land bank was not there. But as for our value proposition and the amount of support they are able to get from us, many of them will tell you that they are getting only the best deals from the land bank. So we are confident that we'll be able to get many of them. Our bankers are already planning to reach out to them and start getting many of those good customers back into the land bank.
Yes, but you still remain concerned about your loan book, your non-performing loan book. You did say on the podium there, you put a figure of 50%, I think, of about 8 billion of your non-performing loans. Tell us more.
Yeah, of course, the quality of our loan book today, it's a major concern. A little over 50% of our current loan book is non-performing. Of course, there's got quite a long history, and part of that history is why the land bank went into debt default. The main focus from now going forward is for us to remediate that big non-performing loan book and cure the majority of it. We have got many different strategies that we are deploying to ensure that through our workout and restructure, we are able to support many of our clients, the clients that are able to go back into productive agricultural activities. We have got additional funding that will extend to those clients. Those that need forbearance packages to be able to be given sufficient time to go back into production, we are doing that. And of course, there are many strategies that we are deploying. It's actually the biggest focus area for us going forward.
Of these strategies that you are deploying, how would those help in getting you out of the credit status, the junk credit status that the bank, I think, was in 2022? Have things since changed? Do you foresee that your credit rating, since you're going out in the market, that obviously plays a big role? How do you plan to help boost up your credit rating?
Yeah, of course, supporting the non-performing clients will help with our financial sustainability. It will strengthen the quality of our loan book. It will mean that we have got many of our struggling clients that will be able to go back into production, and it will mean that we are able to collect we'll be able to collect from those clients, which will, of course, boost our liquidity. It will help us with our credit rating. The high non-performing loan today doesn't help with our non-performing loans. So there are a lot of plans that we are working on to ensure that we are able to build a good credit status going forward. We plan, of course, to go back into the debt capital market, and we need a good credit status going forward. So we hope that, of course, helping these clients and strengthening our loan book will all contribute to that, which will strengthen our case when we go back to the market.
And lastly, do you have a specific strategy on how you are bringing in the small and emerging farmers, those that desperately do need this funding, and maybe their books themselves are not, their books are not very strong enough right now to approach the bank? Is there a way that they could be brought into the fold?
Yeah, most definitely. We do have a strategy for upcoming small-scale commercial farmers. We anchor that strategy into our partnership development and ecosystem coordination, which is really anchored on us creating market access opportunities for those farmers. We put together partnership agreements to help them with pre-funding support and the post-funding support. We identify the various requirements that they have in the entire agricultural value chain and start to play the role of ecosystem orchestrator and help them with connecting them to the right market access, connecting them with technical support that they require for pre-funding and post-funding. And with this, we believe that we are going to increase the chances of success for these commercial farmers. We'll remove success by chance and ensure that success comes through concerted strategic initiative that we are now starting to deploy. And we've started to deploy that. It's not just a talk.
Mr. Khotso, thank you for your time, and we do wish you well.
Thank you very
Thank you. I've been speaking to the CEO here at the Land Bank. We invited this morning to a briefing talking about the kind of details or the kind of plans that they now have. Remember, I did mention in the beginning that they did default and this had a ripple effect, but things seems to be come to a better start, and Mr. Khotso detailing some of the plans to help them stay on course. And we did have the Minister of Finance coming in earlier to endorse what the Land Bank has done, as well as the measures that they have put in place in order to stay or keep their heads above water. And with that, let me hand over back to you in studio.